Assalamualaikum everyone. I'm Halimah Valiyff. I'm from the PNCI accountants. You cannot see the full banner here, but you can see from here, PNCI accountants, a very small accounting firm, but we provide for bigger businesses as well. Our service provided to bigger businesses, international businesses like Chinese. Our clients based on internationally as well, in China, Malaysia, and Europe, and US as well. We mainly provide accounting, taxation, and financial advice and planning services. We started in 2015, so still very quite young firm. Today, actually, thank you very much for Ahmed. He invited me to give that introduction to the Australian taxation system. So it was a very short notice, so I'll just prepare very basic information. So if you want to understand a bit more deeper in Q&A session, definitely you can ask as many questions as you can. So yeah, that's all about us. Now, let's just go to the Australian tax system in Australia. I don't know how many of you really know how the Australia tax system works and how the tax calculated and how you lodge your tax returns and all this information. It's very basic information, but a lot of people, honestly, they don't know. In Australia, definitely there are more than 100 different taxes, but only around more than 10 of them really contributes to the Australian government's revenue system, like our hospitals, infrastructure, everything comes from the tax we paid. So we should be very proud of ourselves. We are contributing to the Australian welfare system. Today actually I'll cover how the tax calculated and what's the tax rate. Is that a flat rate or progressive rate? And do you have to pay Medicare levy? Can you be exempted? And what kind of tax offsets available? Like a tax offset, usually it's a good thing. It reduces your tax payable. How to lodge your tax return and what kind of tax deductions available. It definitely depends what you do, what occupation you are in. If you are in business, what kind of taxes you need to pay. And now definitely it's end of year. So what kind of strategies you can use to reduce your tax. Those are the topics we are covering today. The first, the tax calculation. How many of you know how the tax is calculated in Australia? No one. Okay. It is not very simple.
Some people think they know.
Okay. Yeah. Yeah. Usually, at first I think I knew as well, but when I looked at it, it's not a very simple process. It's a very complex process. So. But when I explain, it's a very simple process. It's like you need to sum up all your income, like if you have employment income, if you have investment income, if you have any offshore income, you need to add up all the income. Then you need to deduct all the expenses, like if you spend money for your work, you need to take out all the work-related expenses. If you have investment property, you need to take off all the investment properties related expenses. If you have any other like a share investment, you need to deduct related expenses as well. So it's like the first step, you need to sum up, add up all your income, then sum up all the expenses. From the income, deduct all the expenses, then you'll get your taxable income. Taxable income is the one you usually report to Centrelink and any other places you ask your taxable income for welfare. So that's how it's calculated, gross income minus all the expenses. So from the taxable income, then you can calculate your tax payable according to your tax rate. So tax rate usually it's very complex as well. It's not like a flat rate, it's like a progressive. After you get your tax payable, then you need to think about Medicare levy, because Medicare levy is on top of tax payable. It is added into the tax payable. It's like 2% of your taxable income. Some people are exempted, but most of the average people, they pay Medicare levy. And for high income earners, they pay Medicare levy surcharge as well. So it will be added into the tax payable as well. And if you have hacks, like a lot of people, they have hacks when they did their studies, then when they start working, they have to pay. So all these tax payments will be added into the tax payable as well.
Educational loan.
Health law, the central link, yeah. So then all the tax payable plus all these, you will get your net tax payable. Then good things comes up, the tax offset, it will reduce your taxable tax payable. We'll talk about what kind of tax offset is available a bit later. Then at the end, if your employee paid the PAYG, or if you're in a business, you definitely paid PAYG installment in advance. All this money will be deducted from the tax payable. If you paid more in advance, then you will get refund. If you paid less than the tax payable you're supposed to pay, then you will pay more tax. That's why after you've done your tax return, when your tax agent gives you the paper, some people get refund, some people get payable, so they pay tax. So that's how the tax calculate in Australia. So is that clear? Complex? Yeah, it relates many different. That's why we always recommend people to go to the tax agent if you have a complex issues like a rental property, CGT, capital gain tax, or offshore income. So it's not the easy process. So the next, let's just look at all what we talked about in a bit deeper insight. That is the tax rates available in Australia. It changes from time to time. Like since COVID, our bracket, it's going up and up. That's good for us. That's the 2023 tax scale. For the first 18,200, you don't pay any tax. But this is only for Australian tax residents. If you are non-Australian tax resident, then you have to pay tax from the first dollar you earn.
Sorry, this is confusing for us. We are students, so we don't understand what we are. So when you say residents, are we considered residents?
Okay, that's very, very good point. That's a very complex point as well. So we'll talk about the tax residents in a minute.
Okay.
So this is the table only for the tax residents. For non-residents, you have to pay tax from the first dollar until 120,000, and after it's the same. As I said, the tax rate is progressive. So when you earn less, you pay less tax. When you earn more, you pay more tax. Like a first 18,000, you don't pay any tax. From the 18,000 until 45,000, your tax rate is 19%. It's 19%. So 45 to 120, you pay 32.5%. So when people earn more than $45,000, they start planning how to reduce their tax, because 32.5%. Like each dollar you earn, if you pay 32.5 cents to government, everyone just feeling not easy. So yeah, that's where tax planning comes in. So for 120,000 to 180,000, you pay 37 cents, and over 180, it's all flat rate, 45%. For example, I'll just give one example. Like Ahmed, he works in an accounting firm, and if he earns 100,000, he doesn't pay any tax for the first 18,000, so it's zero. For the next bracket, 18 to 45, he pays 19%. That means, I think it's all together around 27,000, just 45,000 minus 18,000. Then he has to pay $5,092 tax. That's only tax, doesn't include the Medicare levy and other levies. Then after 45,000, if he earns 100,000, between 45,000 to 100,000, there is 55,000, right? So the 55,000 is taxed with 32.5%. So that the 45% of 55,000 will be added into 5,092. That's how you calculate your tax. Is that clear now?
Yeah, now this is clear.
Okay, let's go to the next one. Okay, now let's talk about the Medicare levy. Medicare levy, so everyone who is entitled to Medicare entitlement has to pay Medicare levy, but it still depends your income. If your income is over 24,000, I think this year, 2023, you start paying Medicare levy. So after that level, the Medicare levy is 2%. It's a flat rate. For senior and pensioners, the starting point is 38,000. But for some people, like students, they're not entitled to the Medicare levy, right? So they don't have to pay the Medicare levy. So in that case, before you lodging your tax return, you have to apply for the exemption from the Medicare. From the Medicare, there is a form you need to fill in. Then after you get the response, then you can lodge your tax return. And also Medicare levy surcharge. That's the question we always get from the clients. They ask, is it a good thing to get the private health insurance? And yes or no? Yes, if you're a high income earner, if you're single, and if your income is over 90,000, then definitely you have to get Medicare levy, the private health insurance. Otherwise, you have to pay 1% to 1.5% Medicare levy surcharge. That will be added into your tax payable as well. For people on for families, the threshold is 180,000. It's a combined income. So if your family combined income is all 180,000, then it's better you get the private health insurance just to avoid the Medicare levy surcharge. When we say taxable income, and if it is 1% to 1.5%, it's still some money. So that's the Medicare levy. I just put some illustration here. The bracket from if you are single, if you are couple, what's the Medicare levy surcharge percentage? Okay, as we said, tax offset is a very good thing. Last year we got low income tax offset, middle income tax offset, small business tax offset, zone tax offset, and health insurance tax offset. But unfortunately, this year, the middle income tax offset, that's up to 1,500, that's gone. The Labor government has already took it out. So when you do your tax return this year, probably you will see you're probably paying a little bit more tax than last year. That's because the middle income tax offset is faded, is ceased. Low income tax offset, usually if you earn less than 38,000, you will get the full benefit. This is the 2022, but for this year, I think it's over $700. Senior pensioners tax offset, that's a huge, big chunk of money, but only people who are already retired, the retirement age, they can access to it. Small business tax offset, anyone who is doing business, they can access to it, but there is a cap in there as well. The zone tax offset usually only applies to people who works in the mining or defense. And health insurance tax offset, usually when you have the private health insurance, you it's already included in the premium, like insurance. The providers, they already taken off the rebate. Then when you pay the premium, you only pay the balance. Okay, before coming up. Okay, we just talked about the help loan. It will increase your tax payable as well, because when you do your study, definitely you will get the loan easily. A lot of people, they don't care, they have to pay that. And after they started their first work, if their income is over 47,000, they start paying. It's a progressive payment as well, like from 47,000 until 54,000, it's 1%, and it increase. So when you earn higher, your repayments will be higher as well. So when you do your first tax return after you study, you start paying your tax debt, and it will be added into your tax payable as well. So that's about tax. Okay. So in Australia, like everyone who's earning, they all have the responsibility to lodge their tax return. So how do you lodge your tax return? Probably some of you already know if you use MyGov to lodge your tax return. So that's one of the that's one of the method. MyGov is free, and all the income is already profiled by ATO, so it's easy. But in complex situations, we don't recommend you to use it because at the end, a lot of times it come back and bite you. So only for employment income, it's better to use the MyGov just to save costs. Another way is tax agent like us. We lodge tax returns for our clients' customers. So that's one of the way. The other way is paper. Probably no one really want to use the paper form these days, except those very old Australian people. They still prefer to use the paper form. Even my clients, they come to me, they pay me to fill in the form and they lodge it. So it's kind of habitual thing. So yeah, it's all good. So this is about how to lodge your tax return.
But anybody that has an employment only, it's easy to go to MyGov. But if you have any other expenses or income, like contract work or a side business or side hustle or Amazon buying and selling,
I have people that do with crypto.
Crypto, never do it by yourself.
Yes.
There's so many holes in it.
So that would definitely go back to you, because you can help us figure out what is the best value for our money, basically.
That's right. So yeah, that's the thing. When you go to tax agent, definitely you pay very small, especially for simple tax returns, you pay very, very small amount of money. But the benefit is, one, you can make sure the accuracy of the work. Second, sometimes you don't know a lot of holes and things in it, you don't know, but the tax agents, they usually know, and they can advise you and get the information from you and complete tax return. So that way, probably your refund can be maximized. And if you pay $100, probably you can get hundreds or thousands of dollars more refund than by doing yourself. So that's the beauty of tax agents. So lodging your own tax return, definitely there is a deadline for lodging the tax return. If you do by yourself, you can do before 31st of October of the year. But if you do through a tax agent, you will have extended due date, that is until the 15th of May of the next year.
Ooh.
So it is like
Almost a year.
you have a whole year to do your tax
Okay.
return. Yeah.
Because this was my question.
Income and expenses, when you do your tax return, definitely the first step, you need to gather all the information about what's your income, what's your expenses. Then you can go to tax agent or you can go to the MyGov and to do it.
Do those extensions apply to your business tax return?
Yes. Usually, if you only have employment income, then all the income details it's pre-filled in the MyGov. All you need to do just enter your expenses and answer some other questions like if you are a resident or not. That's a very tricky question for people that doesn't stay in Australia, or they always travel around, or for some students come here just for a few months for study. We already covered help debt and special rules for minors. Probably a lot of people don't know about how the people who are under 18, how they are taxed. Usually, if they work like other the adult people, their income is ordinary income, so taxed like an adult. But if they income any trust distribution or the dividends, then they will be taxed on the marginal rate. Like for this year, we just looked at this year's tax bracket. The lowest is 19%, highest is 45%. So when the minors on the 18s, when they receive trust distribution, they will be taxed at 45%. So if you have a trust, if you want to share the income with your families, just be careful about it.
So 45%
45%.
from the first dollar?
Yes.
From the first dollar?
For the trust, just the distributed income. Yeah. Work-related deduction. Okay, probably you know a lot about the work-related deduction. That's one of the very effective way to reduce your tax pay, because each dollar you claimed helps to reduce your tax payable. Like if you are in the 32.5%, definitely it will give you much deduct reduce your tax. But I'll just tell you one thing. Currently, we are sitting at the end of year, and there's so many advertisements going on. Now, end of year, just buy this, buy that to save your tax. And a lot of people, even my clients, come to me and ask me, "I want to buy this. I heard if I buy this, my tax payable will be reduced by that amount." It doesn't work like that. Like people think if I spend $100 to buy this work-related thing or business-related thing, then I can get back this $100 from the tax. It doesn't work like that. We just looked at all the tax bracket. So when you have very high rate of tax, like a 45%, or 32.5%, when you spend $100, if you are in the 45% bracket, you can save 45 cents. If you are in the 32.5 bracket, you can save 32.5 cents in each dollar. So it is not like if you spend $100, you can claim back the $100. It doesn't work like that.
Taxable amount.
It only reduces your taxable income.
So yeah. So the benefit, the financial benefit is the same percentage of your tax.
That's
basically.
right. The usually tax rate, when we give the tax return to the clients, we say, "Oh, that's your average tax rate," or "That's your effective tax rate." It means the average, like not your marginal maximum tax rate. But when you spend money to buy work-related things, it will reduce your tax payable by that marginal maximum rate. If you're under 45%, it will be reduced by 45%.
Unless, for example, if you're jumping from one bracket to the other and you spend money work related and that's legal, and it brings you to the lower bracket because your taxable income went down, this is where you get the maximum benefit.
That's right. Like if your taxable income now 60,000, and if you pay 20,000 to your superannuation fund, then your tax bracket will be jumped from the 32.5% to the 19%, because the 20,000 tax deduction will reduce your taxable income to 40,000. So 40,000, it is in the 19% bracket. Okay? Yeah. It only reduces your taxable income when your taxable income is reduced, your tax payable is reduced.
Okay.
Because when you earn more, you pay more. You earn less, pay less. So currently, this is a very general deduction that's available to all the occupations. But if you are in any other occupation, you can just go to ATO website, just put your occupation, then it will tell you what kind of deductions you can claim as well. So the typical work-related expenses, uniforms, protective item, like if you are in a hospitality, you can claim in a lot of protective items and uniforms. Uniforms has to have a kind of like a logo in it. It's not like I'm required to wear black pants, black t-shirt. It's not. So yeah.
I work as a carpenter, so if I buy protective, what I go
that's
to,
all deductible.
It is deductible, okay. Because
carpenters definitely need a lot of protective, like steel capped shoes.
Yes.
And the work pants that is durable, and that's all deductible.
Okay.
And working from home expenses, that's for recent years, because of COVID, there are a lot of changes and give you more scale, more room to claim more. Employment-related mobile phone internet costs. Just be careful about that. If it is like a very occasional, don't try to claim. If it is just a usual thing, you always use your mobile to, if you use your mobile for work and internet, then you can claim it. Subscription and union fees, definitely they are 100% claimable. Travel expenses, that is a bit tricky as well, because a lot of people, they just claim the travel expenses, but sometimes the workplaces have already reimbursed. In that case, you cannot claim. Or the travel, some of them is private, some of them is work related. So you need to have a logbook or diary to substantiate. When the ATO comes and knock your door, you have to show them something. Otherwise, they will disallow it and give you a penalty, and also you have to pay the interest.
I have a question about mobile phone and internet cost. I'm working once a day. 4 days I'm working from the company, but 1 day I usually work from home. Can I use my home internet, or can I declare this one?
Yeah, of course you can if you work from home.
But once a week.
Once a week. Yeah, definitely. There is for different kind of calculation method. One is 82 cents per hour. If you use 82 cents per hour, you don't claim any actual expenses. All you need to do, you need to calculate how many hours you worked from home, then find out the hours and multiply by 82 cents. That's the easiest way. If you have huge expenses, like when you're working from home, definitely you use lights and for heating in summertime, for the summer winter air conditioner. So if you want to claim all of that home expenses, only the work related portion, you have to keep a good diary, and you have to have a very good record keeping what's the amount, and then you give all this substantiation to your tax agent that they claim it for you. So usually what I do, I'll calculate all three different methods, and which one gives you the maximum deduction, then I will use that one. So usually you cannot tell which one gives you, because every household is different, and some people spend less, some people spend more. So it depends on the individual circumstances.
So I'm mobile phone, use my personal mobile phone, but sometimes I'm
just one thing, if you use 82 cents per hour, you cannot that is all included, like a phone, internet, heating, everything.
Okay.
It will be catered in 82 cents, so you cannot claim any other. If you don't use that, then you can use the actual expenses.
Sorry guys, let's keep the questions.
Sure. Okay. Except those, there are some general deductions that's available to everyone, like self-education expenses, but it has to be very directly related to your employment. Tax agent fee, donation, income protection insurance, investment expenses, and self-superannuation contributions. We have just talked about the self-contribution. What's that? Actually, this is one of the big tips we give to the clients, especially for high income earners. When they ask us how to reduce the tax, that's one of the tips. We'll tell them to top up their superannuation. So usually there is a 27,500 cap. In a year, you can contribute to your superannuation account. That's called concessional. So that is deductible, but one thing you have to be very careful and remember, after you submitted your payment, you have to fill intention to claim form. There is one form, intention to claim, from the ITO website. You need to fill that in and send to your superannuation company before the 30th of June. Otherwise, you cannot claim that.
Before or after you send the money?
You can do
after you pay the concessional.
You can do it at the same time or after, but it has to be before 30th of June. These last few years, actually, there is a carried forward rules. It means if you didn't contribute enough in the past years, it can be added to this year, so you can contribute more than 27,500. So it is very beneficial for people who sold their investment properties and they made a huge CGT, capital gain, and they're paying like hundreds of thousands tax. So at that time, if they paid that money into their superannuation account, they can save huge tax. They just save the money for their future, for retirement, instead of giving back to the government. If you have a rental property, those are the expenses you can claim: interest on investment loan, land tax, council water rates, body corporate charge, repairs and maintenance, agents commission, advertising, cleaning, or any other expenses you think you spend for the rental property. And also definitely capital works deduction is some asset depreciation as well. So anything you think you spend for the rental property, just try to keep all the invoices and bring it to your tax agent. And investment deduction here, when I talk about investment, it's investment to shares and any other like a crypto or financial investment. So usually you can claim like a bank fees or interest on money borrowed to buy shares, or if you pay money to the financial planner or any like share platforms, so ongoing management fees, subscription, or borrowing cost, that's all deductible. And cryptocurrency, that's a very hot topic recent years, because a lot of people think a lot of money in the cryptocurrency. So when you sell any of your cryptocurrency or digital asset, there is a capital gain implications exist. So if you have, if you're dealing with the crypto, I advise you to go to the tax agent or accountant. Don't do it by yourself. And capital gains tax, one thing you always have to remember, if you keep the asset for more than 1 year, you can eligible for a 50% discount. So if you sold your investment property for 500,000, and if the cost base is 300,000, then you'll have $200,000 of capital gain. So if you sell it within a year, then you have to pay capital gain for the whole amount, like a 200,000. If you pay after 1 year, if you hold for 1 year and sell after 1 year, then you can get 50% discount. And that's same for cryptocurrency and shares, any other asset. And just remember, if you have overseas investments, if you sell them, you still have to pay tax in Australia for that.
But no one knows.
Yeah, that's true though. So we all talked about the individual situations. Now let's talk about the business. Any of you have business in Australia? Is it trust or trust? Okay, yeah, that's the mostly commonly used structure in Australia. So ABN, yeah, all the businesses has ABN, but it's different because of the structure, like if there's a sole trader, trust, partnership, or company. So if you have an ABN and if you have a separate business account, and if you have the intention to make profit, you're doing under kind of professional license, all these indications tells ATO you are carrying on a business. So when you start the business in Australia, the first step you need to think about, what is the structure I should use? What is most beneficial for me? Which one gives me more tax benefit? Which one gives me more protection? That are the questions you need to think about. So in Australia, mainly people use sole trader, company, partnership, and trust. A lot of people use sole trader structure when they start the business because it's simple, doesn't cost much. As soon as you get the ABN, you can start your business. But when your business start growing, when you're having more income, and when you have private other asset, then people start thinking about, okay, I'm doing business. There are risks involved. How can I protect my own private wealth? What can I do? So this is the step. You need to go to a lawyer or accountant to get the advice. So here I'll just very briefly talk about the differences of this four structure. Sole trader, that's the very simple structure. It doesn't cost much. All you need to do is just get the ABN. And setting up is very simple. Tax obligations, it's just your personal tax return combined with any other incomes. You just lodge one business schedule together with your individual tax return. Legal obligation, law, but when it's really comes up with the lawsuit, really doesn't protect you at all. And owner still is you, responsibility for business decisions, that's still you. And if there is any debts, losses, you're responsible for that, and no separate bank account needed. And administration is very simple. So this is the simplest, easiest way, but no protection at all. Partnership, that is sometimes just people come together, okay, we want to do business, right? So can we just do it together? Okay, they'll just apply for ABN and start the business. That's called partnership. Some people a bit cautious. They go to the accountant or lawyer, set up a partnership agreement. So it tells what will happen if the business doesn't go well, what will happen to the debts, who will pay. So clever people, they set up the partnership agreement. So when there is any kind of disputes happens, then the partnership agreement comes and protects. The legal obligation, it's still law, owner, your partners, and responsibility for business decisions. You and your partner make the decision. Any debts, losses, partners are responsible, but you need a separate bank account for that because it's the money of two people, not only yours. Administration, that's still simple, but a bit more than the sole trader. Company. A lot of people use company. One of the best benefit of the company, the tax rate currently for small companies, it's 25%. So for people who are earning very high income, like doctors, engineers, professionals, they usually use company. There is a lot of anti-avoidance legislation comes in and stops, but still that's a very good structure to pay less tax. But company, the setup, it's costly. You have to pay money to ASIC every year, and even when you set up the company, you have to pay the highest to ASIC. Complexity is very complex. Tax obligation, medium, because the tax rate is only 25%. Legal obligation, very high, because there is a body who manages all these companies. It is ASIC. So even the financial statements, tax return, there is a very specific rules you have to follow, and you have to produce your financial statements every year. And you have to declare you are solvent to ASIC. And owner of the company, directors or shareholders? Okay, that's right. For a company, shareholders are the owners, but directors are the decision makers. So some cases, like a lot of cases, big companies, they sell shares. So we buy the shares of the big companies. That's why the share market is in there. So we are the owners of these companies while you buying their shares. But the decision is made by the directors, not by the shareholders. But the directors are responsible for the shareholders. So that's why there is an annual general meeting every year to account what they did in a year and their financial situation, and give some the forecast report about what they are doing in the future. That's AGM. And the biggest thing, the company's biggest advantage, it protects you, especially when you have a huge personal asset. If you're a wealthy person, you don't want to do the business under your name or in any structure that doesn't protect you. Company, it is a separate entity, legal entity. So if there is any lawsuit or anything happen, everything settles within the company, unless the lawyer of the other side, they can prove you are neglected or ignored, or you didn't do your director's responsibility well. It is very less cases, but a lot of cases, everything settles within the company. Probably you already heard a lot of construction companies now. There's so many big construction companies, they're bankrupted in the last 2 years. So because it is a company, all the creditors, they cannot do anything, because everything, when they sue, everything will settle with with the asset, with the money that the company has. They cannot touch any personal asset of the shareholders. So that's the beauty of the company. And administration is very complex. The trust usually that is a very complex one. But for small businesses, a lot of small businesses, like you said, they use trust because it's flexibility to split the income within the family members. It is very flexible. You can just depends on the income of the family members. You can distribute less to the high income earners, more to the less income earners. Complexity, it is very complex, so don't try to set up the trust by yourself. Even there are so many companies online, they set up the trust just for probably $100, $200. But when you answer the questions there, you don't understand what they're asking. Every question asked there, they have a very deep legal meaning. So when you don't understand and just tick no, at the end, when there is a legal cases or when there is an ATO comes and knock your door, they all bites you. So I recommend not to set up the trust by yourself. Tax obligation is high. There's so many ATO. The ATOs rather, the eyes is always on the trusts, how they distribute the money within the family members. So a lot of cases, especially currently this year, it is very hot topic because the ATO has started to looking at the distribution. If you say I distributed 50,000 to my eldest son, like if he's in a uni, then if you have not paid that money physically to him, then ATO come and say that's not distributed. The trustee of the trust has to pay the tax for that at the marginal rate. That means 45%. So this is a new trend. All the accounting firms and tax agents currently are very busy to prepare their trust distribution statement and looking at your income and expenses, your taxable income, just to make sure you distribute correctly and not to fall in that. It's called 100 rule. It's a new thing for this year. So if you have a trust, I recommend you to make your trust distribution before 30th of June. That's good. Usually we are not that busy in June, but this year we are extremely busy because we're just preparing all the trust distribution in advance and correctly. Yeah. So yeah, that's all about trust. Trust, the owner is the trustee. Trustee is the are you trustee or do you have a company that's trustee? Company trust. Yes. So the in trust situation, usually trustee can be a company, that's the best structure, or individual. When you have individual trustee, definitely there are still some problems, especially protection side.
Especially
but
loan and mortgages.
So yeah, the company trustee for a family trust, that's the best structure. Yeah. Okay, so that's all about the business structures in Australia and the key differences. Do you get any idea? No. Or I don't want you to sleep.
Very good introduction.
Sorry?
It's a very good introduction.
Is
Thank
it?
you for that.
Thank you. Tax requirements for your business. Definitely when you have business, a lot of tax obligations comes in. So it still depends on if you employ people, what's your business income. depends on those, you need to register for different tax. As I said, in Australia, we have more than 125, I think, the different taxes, and more than 90% of revenue comes from the income tax, the GST, CGT, fringe benefit tax, luxury car tax, payroll tax, land tax. Looks like a lot of them relate to ATO, but only stamp duty, land tax, those relate to the state governments. So if you are in a business, if your income is over 75,000, you are compulsory register for the GST. And if you employ people, you have to register for the PAYG withholding. If you lodge your tax return this year and paid your tax next year, you will automatically fall into the PAYG installments. That means you have to pay your tax in advance in each quarter. So the ATO give you kind of amount, you have to pay this tax in advance and you have to pay. And fringe benefit tax, that's a complex area. If you have a company, if you use company asset for private purposes, that you have to pay fringe benefit tax. And capital gains tax, that's for everyone, not only for business. So if you sell any asset, there is a capital gains tax implications kicks in. Fuel tax credits, that's usually related to the transport companies. Wine equalization, that is related to wine export. Luxury car tax. If you buy, then that's a very interesting topic. Usually when you buy a car for your business, there is a cap that you can claim. There is a cap for GST you can claim. It's like if you buy if you buy a very expensive car, you can claim all of them. No, ATO put the cap for last year, I think 59,000 something. But if you buy ute or any other kind of commercial vehicle, then there is no limit. But the usual cars, there is a limit.
What is considered luxury car?
Luxury car, anything over, I think last year's cap is 59,600 something.
That's the luxury.
Yeah. So you can still buy, but you can only claim GST and depreciation until that cap, and the rest of them will become private. Payroll tax, that's usually related to big companies, and land tax, that's the state. Now business expenses you can claim as deduction. We already talked about the other work-related expenses. The business expenses, it's more broader. It gives you bigger room to claim. So only if you can prove I use that for my business. Without these expenses, I cannot make that profit income. Then you can claim that. But before claiming, talk to your tax agent. And any expenses, if it is mix of business and private use, you can only claim the portion that you use for your business. Like a motor vehicle, that's the most common example. Like a motor vehicle, you drop your kids, then go to work, or you use that 3 days for work and 3 days for your private purpose. In that case, definitely you have to get the private portion out.
Logbook,
yeah. The logbook, it is necessary for work-related or business-related expenses. Logbook usually, has anyone used logbook?
For 3 years.
Okay, yeah. If you have one logbook in the last 5 years, yeah, if there is no changes in the circumstances, you can still use it. But after 5 years, you have to renew. And when you get a new car, you have to get a new one.
Yeah.
So logbook, especially for the usual family cars, you have to have the logbook. But for ute, van, the big commercial, the taxi, taxi, if it is like currently Uber, if you use for both for private and the business, you have to have a logbook, especially for Uber. I recommend you have to have the logbook. Otherwise, you are only allowed to claim cents per kilometer. That means for this year, I think around 3,900. For this year, it's increased. But usually currently the inflation, the goods price is up so much. If you use cents per kilometer, you lose a lot. So if you have a logbook, according to the logbook, you can claim all your motor vehicle expenses like registration, insurance, your depreciation, maintenance, fuel, everything. So it is better to have a logbook. And for claiming everything, as I said, you have to have a substantiation like invoices or payment receipt. Business expenses you can claim as deduction. That's continuous motor vehicle expenses, home-based business, business travel expenses, workers' salaries, wages, super contribution, repair maintenance, replacement expenses, any other operating expenses, and depreciating asset and capital expenses. So another very good thing that is added for this year, 2023, small business technology investment boost and small business skills and training boost. Like if you buy computer or any technology related thing, or you buy software for your business, if you buy it for $100, you can claim $120. So it is called boost. Additional 20% deduction available for the cost of business expenses and depreciating asset up to 10,000.
It must be inside the current year. For example, I bought my computer previous year, but
that's a very good question, actually. If you bought last year, that starting time is March. I can remember the exact date, but I can check it for you later. If you bought it in 2022, after March, you can still claim, but if you already lodged your 2022 tax return, you can do amendment, or you can add this in 2023. So probably just add another schedule. That's all related to businesses, all right? Not work, yeah. So if you buy computer for employees, and if you buy a software to improve your business condition or business processes, you can claim 20% extra on top of the original expense. And small business skills training boost is the same. If you paid training costs for your employees, you can claim 20% more expenses for that expense.
Or for yourself. Like I took a bunch of courses.
That's a very good question. I'll find out, because everywhere it is said you cannot claim it for yourself. So it's only for employees or improving the office condition or your business condition, business processes. But because that's very new thing, it only announced last month. So the ATO is still working on put more instruction. So that's the current instruction. There's still a lot of things not very clear, but this thing can directors or owner of the businesses can apply. If in your tax returns, if you are the director and in your tax returns you paid salary as employee, then it is fine. But if you paid as a director, then
Or sole trader?
I need to ask that, because there is still not very clear guidance about the owners. Yeah, I heard the same question from other people, but I can tell you that's a very quite new thing. Budget, yes. Okay, looks like we already covered the individual tax returns and what can be claimable and how to lodge the tax returns, all these processes, and also businesses. We only touched the surface about how to do the business tax returns and what is claimable and what's the business structure and what kind of taxes that is associated with the businesses. So every time when I said, when you have a complex things, just go to the tax agent. So finding a good, right tax agent is very important. Definitely, we talked about when you have tax agent, you pay money, but a lot of times it's worse. It helps you to avoid the tax audit because usually it's the ATO considered the tax agents do the right things, and you can ensure you can the maximum refund, and also the tax agent fee is tax deductible, and you can sleep well because you know your tax agent did the right thing for you. So the warning signs to watch out for tax agents. If any tax agent guarantee or promise you, oh, I can get how much tax refund for you, or when you go to them, they don't ask much question and just finish your tax returns, or they ask you to sign on the blank tax returns, or there's so many cases in 2-3 years ago, the people, they don't have tax agent license, they just said they're tax agent, and they use the MyGov, the client's MyGov account to lodge their tax returns. If that's the case, just be cautious and refuse to pay money because they're not licensed. Yeah, those are the things you should be very cautious.
Is there a way, talking about this subject, is there a way to identify if
Yeah.
a tax agent?
Yeah, the first step you need to ask, what's your tax agent number? So when they tell you tax agent number, you just go into online tax agent number, put the number, then it will come up in the tax agent board website. If it doesn't come up, that means yeah, that's a
Can we know if they were audited?
Yeah, there's so many cases after MyGov came out and people can lodge tax returns from MyGov. There's so many cases came up and audited and disallowed. Yeah. All right, so that's all about we talked today, and in the future, if you have any question, you can get my card and you can call me.
Do you know?
Or you can ask your tax agent.
Okay, thank you so much, Halimah.
Thank you so much.
Excellent. I really appreciate it. Very insightful. It gives an understanding of how to go about and how to understand the tax system in the country, which is quite complicated. And again, that's where people like yourself come in very handy. We'd like to do a few-minute Q&A session.
Sure.
Right.
I just got a phone call from a client, and the accountant advised him you cannot sign a contract before the end of financial year, because the sale of the contract goes on the sign and they're signing. Otherwise, you have to get checks.
Oh,
So
yeah,
the
that's a
contract must
separate
be
issue. Yeah.
on the day, but then I have other accounts that was the other way. When it's settled,
Yeah.
that's what it counts. Which one is
Contract
15
date.
years? I don't know which one it is.
Contract date.
When they sign the contract.
Yeah.
That's fine.
Again,
Yeah.
which is my vendor or my supplier, right? For animation and related work. For a up to X number of hours, just like a retailer, right? I withdrew cash from my account and I gave her cash because she's traveling, because she could use it. I don't have any bank trail that I paid. Is that okay?
But is there any invoice?
Yes, there is.
Okay, that's fine. Only if you have invoice. Yeah. Any other questions?
Yes, I have.
Regarding a resident for tax purpose,
Mhm.
you said that if anybody went overseas after 6 months, still he's not resident for tax purpose.
I said for any case, any kind of case, you cannot say yes or no before you look at their lifestyle, their contracts, their social circle, and their situation in other countries.
Even the person with overseas, he's working there now.
It's only for work, yes?
Yeah, he's working
Yeah.
there. Okay, and for more than 1 year.
Yeah.
So after 6 months, he's not considered as a resident for tax purpose.
No.
But
And even sometimes even 2-3 years, and there are cases even for 3, 4, 5 years, the tax office still said you are tax resident of Australia, you have to pay tax here. So that's why I'm saying you cannot say yes or no according to this description. You have to get a lot of stories from the client to decide if tax resident. If your relative is in overseas, but does he have house here? Does he have family here? Nothing. So his intention is to work there and come back, or just
he's
stay there.
working there now.
Yeah.
Okay, for more than 1 year.
Yeah.
So you're saying that when he come back, they will ask him, give us your income. What about if he spent everything there and even he purchased something in his country? When he come back, he'll come again to work from zero. So when he's back, he'll be resident for tax purpose. Am I right? Or
Yeah.
they will ask him for the previous one? This is my question. They will ask him for that year? 3-4 years, they will ask him?
When you decide your tax residency, it is for whole period. Or some cases, when you changed your intention, like you went to England just for work for 2-3 years because you have a contract, but your family is here, your bank account is here, everything is here, then you're still tax resident, and your intention is to just for work 2-3 years, then come back. In that case, he's still tax resident and he has to pay tax. But the good thing is, Australia has a tax treaty with a lot of countries. So when they pay tax there, they can still report here, but they can get the tax offset for the tax they paid in overseas. So there is no double taxation. So if they paid that, they don't have to pay that, but they have to put the income into the tax return. But while he's there, suddenly he said, oh, this country is really nice, I want to live there permanently. That's the step, everything will change. So he's not tax resident of Australia, he's become a non-resident. So when we decide the tax residency, we usually ask a lot of stories. Definitely they're too much, but it helps. So when we get the audit, especially in audit situation, we ask so many stories. Actually, what happened, like very detailed things we ask.
I have one more question.
Yes, sure.
The trust, you said that he should secure physically. For example, the example, 50,000, he should give it.
That's right, yeah.
Okay. What about if he give it as a share?
If he can prove...
he give it as a share, not physical, not share. Okay.
Is that the share of your companies, or is that the share that is traded in the traded publicly?
No, the company itself.
A company yourself.
Yeah.
But do you know the value of the shares in your company?
For example, if they have something like 1,000 per share or something like that.
If you know, or probably that's my guessing, in a lot of cases, definitely HQ will look at what's the value of the share. So if there is a valuation says the share is the $10 per share, then if you gave him 500 shares, then definitely then he becomes the owner of that company. So should be fine. Definitely there is a consideration. Is that Good enough? Yeah.
Sorry, is the trust, can a trust have shares, or we're talking
Trust.
about another company?
Company, because company under the trust.
Up,
You
the
can have as many
trustee,
companies as you can under the trust.
Yes,
Ah,
because you have so many, you can have companies.
trustee is the like a manager who controls and manages the trust. So it is like a manager.
Okay.
So the trustee can be an individual like yourself, or you can set up another company and the company shareholders and directors can be you, but the company can be the trustee. Yep.
Question from earlier, you mentioned the travel. So as a sole trader who travels quite a lot, how much of a percentage can you claim?
Very good question. That totally depends on the logbook. If your logbook says 100%, it is 100%.
Conflicts.
Yeah, you can keep the logbook for 12 weeks. Then if your circumstance doesn't change, you can use that for 5 years. If there is a changes like employment, or you sell the car, you got another car, or you travel less than before or more than before, then you have to start having another new logbook. Otherwise, if no changes, you can still use that for 5 years.
So that also applies to like international travel and stuff like that, keeping on.
Oh, no. When I say travel, it's a logbook.
No, I'm
It's a-
referring to international travel.
the travel expenses
Yeah.
are like a meeting, conference, or just for business.
Having
The
travel-
travel expenses, you have to have a diary. Like a lot of travelers, if you go somewhere, usually there is a private portion and business portion. Like if you go to meeting or meeting a client, if it happen in 1 day or 2 days, if you go there for 1 week, then you have to have a diary to say, okay, within that 2 days, I did this business and I incurred those expenses. So you have to put everything and say your flight ticket, it's from this day to this day. So within these 2 days, the businesses happen, all the accommodation, everything should be business related, but the other portion is private. So we need to add up all the expenses, then we get the percentage, what percentage is private according to your diary. So the diary is, you write the diary, we believe in your diary, so we worked out according to your diary.
But we also make sure that if the company reimburses you, that we cannot mention that, because that would be.
Unclaimed.
Yeah, if it is reimbursed, as I mentioned before, we cannot claim.
Actually, I hear a lot. I found another job. I'm getting paid 100 now, but I found another job where they're paying me 130. I'm not accepting it because I'm going to pay more tax. Yeah, I've heard this a lot, and I assume these are just new people or people who just started working in the country. Is it true?
Yeah,
From what I understood from you in the beginning of how it's divided, doesn't make sense why would someone refuse to get paid
yeah,
more.
I would take who pays more, of course, because even $1, you're not paying all the $1 to tax. You only paid fraction of it. Yeah.
Remember more than one person. Especially Turkish friends, they told me the same thing.
But it's a lifestyle as well. In Australia, there's so many lazy people. So when they think, oh, okay, if I earn $100 more, I can give $30 back. I can only keep $70. Is that worse to do it? A lot of times, if you have a family, if you have a kids, that's the consideration. Should I spend that time with my family? Or should I just give that time for extra $70? Is that worse? So that's the situation.
I would like to start selling products on Amazon.
Mhm.
I'm talking on behalf of anybody now, right? If I was to do it on my own, easy. I just calculate how much I'm spending and how much I'm making, and I just basically furnish that.
Yeah.
But let's say I want to do it with a friend. We agree over a coffee. Okay, we'll invest $2,000 and see how it goes. He will give me 1,000. We transfer it to my bank account now, and I will create a separate account in the bank to make my life easier. So I know that account, that's everything that goes. So I put in some money, he puts in some money into this account, but it's on my bank account, it's my account, and there is no legal documents between me and him. We're just two friends want to do some side hustles.
That happens a lot,
Yeah, how do we go about it? What is the right way?
If there is no dispute, that's all good.
Yes, that's, yeah.
When there is, you will be regret, oh, I should have ever written things.
But is there, and how do I claim at the end of the year? Let's say we make some profit.
So you're clever, you set up the separate bank account, so all the expense and everything happens from there, so it is very clear.
Okay, and it's easy to say, okay, this is for him, this. So at the end of the day, let's say
It's all about record keeping in your situation, yeah,
that's okay.
because only the record keeping can save you.
Okay.
I have a question.
Yes.
With bonuses, sign-up bonuses,
Is it the employment?
yes,
Employees pay bonuses?
Yes. How is it calculated in price? And
It's
does it
still
factor
part-
in
Yeah,
price
it's-
return? Does it come?
Yeah, of course. When the employees gives you bonds, they will add that into your report.
Yes.
So it's already reported. So it's part of your assessable income.
Yeah.
So it will add you taxable income.
Yeah, and as a result of that, you pushed a couple of brackets up, or is tax
Yes.
more? How
Sometimes
does it tax? Is it
no, because it is a bonus. It's income. It will add into your taxable income. Yeah, the bonus, it's very funny area actually. My clients, they calls me, oh, I'm getting bonus, but this year I have this much income. Should I just take it now or next year? No, the first question next year, what's your income? Will it increase or decrease? If decrease, leave it to next year, especially in a retirement situation. People who works in government, they get usually like some extra income, So if they're ready for retirement, then definitely it's very good to defer any kind of income to next year. But for young people, the income is always increasing. So differing income is very dangerous.
so it's just treated as a
Income.
salary, as
It's ordinary income.
yeah.
No,
Okay.
Well, Halimah, thank you so much.
thank you.
So thank you so much once again on behalf of the microphone and everybody present. And everybody
Thank you
will
very much.
benefit, inshallah, from this very informative session.
Inshallah.
Definitely, thank you.
Thank you
Thank
for
you.
everyone for coming and listening.